Did you know the fear of taking risk is one of the biggest reason most investors fail to achieve their financial goals? Or maybe you have been too cautious in stock market only to see others make the bold moves and reap the big rewards. If you have ever hesitated to take calculated risk or struggled with fear in investing, this episode is for you. Namaste Tissot family. My name is Soubhagya Sahoo and welcome to the episode 14 of our 100-day trading and mindset series. And today we will tackle a topic that's the core of every investor's journey, the risk. Most traders and investors in India either fear risk so much that they avoid opportunities or ignore it altogether and face heavy loss. But understanding and embracing risk is the foundation of a successful investing. By the end of this video, you will have the mental framework to approach the risk confidently and make smarter decisions. But before we dive in, make sure to check out our previous episodes in this series. You can see in the I button where we have discussed topics like impulsive control, journaling, and more about the trading discipline. And don't forget to subscribe to this channel and hit the notification bell below so that you won't miss any future episodes. And if you are finding the series helpful, give me a thumbs up in the video. It helps us grow and bring more value to you. So here's the truth, risk isn't something to fear, it's something to understand and embrace. When you mentally prepare for risk, you stop making emotional decisions and start seeing opportunities clearly. So let's dive into how you can build a mindset that views risk as an essential part of investing success. Let's talk in a point wise manner. Okay. So, point number one, understand the nature of risk. We know that risk is an unavoidable in investing, whether you buy a blue chip stocks like Reliance, Tata, etc., or taking chances in the smaller companies. So think of risk like driving in a Mumbai traffic. You cannot avoid the chaos, but you have to navigate it to the with the better with experience, discipline, and the right tools. Similarly, understanding market dynamics helps you manage your risk effectively. Point number two, we'll talk about the types of risk and how to handle them. So there are broadly three major type of risk in investing. One, the market risk. The broader market goes down, impacting all stocks. Okay. Stock specific risk, like something specific to a company, like poor earnings. Third, emotional risk, like panic selling or overconfidence. For example, like during the COVID 19 crash, many panicked and sold their portfolios, fearing future losses, like in the further losses they can incur. But investor who embraces the risk and stayed invested in quality companies like Infosys, HDFC Bank saw significant recoveries and gain within a year. Point number three, the power of calculated risk. So, taking risk doesn't mean being reckless, it's about taking calculated risk. So, the actionable tip over here is like before you invest, ask yourself these questions. How much of capital can I afford to lose? Does this investment align with my long term goals? Or am I prepared to hold the investment during the volatile times? So one of the example I would say about the greatest investors of India is the Rakesh Jhunjhunwala, who took calculated risk by investing in undervalued companies. Like we all know, the major and one of the biggest investment he does did was in the Titan when others doubted them. But his patience and understanding of risk paid off massively in the future coming years. Point number four, building a risk tolerant mindset. So here's how to mentally prepare for risk. First, accept that losses are the part of this business or this game. No investors win every trade or investment. Point number two is diversify your portfolio. So, spread your investment across sectors to minimize your impact. Point number three is always use stop loss orders. So, protect yourself from the bigger losses. Fourth is the focus on long term approach. Markets are volatile and in short term, but rewards patience over time. So think of your portfolio like a cricket team. You need both aggressive players and steady players to win a match. Similarly, a balanced high risk, low risk investment in your portfolio, and that's how you manage your risk. So let's recap and take the key learnings from this particular video is to summarize how you can mentally prepare for risk in investing. First, understand that risk is inevitable and essential. Identify the types of risk and handle them strategically. Take calculated risk instead of impulsive ones. Build a mindset that embraces long term opportunities over short term fears. Remember, risk is not your enemy, it's your partner in building wealth. So, how do you manage your risk in investments? Have you ever faced a situation where fear of risk stopped you from taking an opportunity? So, share your experiences in the comment section below, and I'd love to hear them. And if this video gave you some piece of clarity, please like, share it with your investment friends, and subscribe to our channel for more actionable insights. And don't forget to check our earlier episodes for more tips to master your trading and investing mindset. If you found this video insightful, hit that like button, share with your friends who are struggling in the stock market, and leave a comment down below about your biggest trading challenge. I'd love to help you tackle those in the future videos. And of course, don't forget to subscribe to this channel for more game-changing contents. Okay. So remember, the stock market is a journey, not a sprint. It's not about how fast you make money. It's about how consistently you grow your wealth. As a part of TSM Hub community, you are never alone in this journey. Together, we'll master the art of trading and investing at a time. Until next time, keep learning, stay disciplined, and let's build that financial freedom together. So see you soon in the next video and have a great day. Thank you.